Welcome to the Daily Horizon View Show. Hello, Valueholics. Today's date is the 4th of the 10th, 2019. Today we're looking at the top 5 exchange-traded funds on the ASX. Our spotlight today is QHAL, which is the VanEck Vectors MSCI World ex-Australia Quality Hedged ETF. What a mouthful. Let's get into it. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, Valueholics, let's take a dive into the top 5 ETFs today for the top percentage rises. Looking at QHAL, QHAL, which is a spotlight, hang around to the end, very interesting. GEA, Fuel. So for those who have forgotten, QHAL is the ETF Securities S&P Biotech ETF. That one tracks the S&P Biotechnology Select Industry Index. You've got a market cap for this one, which is pretty small, about $5.8 million. Dividend yield, you'll be getting about 2.44% when I last checked. Not too bad for an international ETF. So QHAL, we saw a rise of 1.52%, which equates to 72 cents on a very low volume of 314 shares traded. As mentioned, this is quite a small ETF. Getting our feet wet here on the top 5 ETFs for percentage falls. We're looking at ESGI, UPB, Food, GDX and INES. So we're looking at ESGI, which is the VanEck Vectors MSCI International Sustainable Equity ETF. So this one is a passively managed strategy for investing directly into international technology securities. Relatively small ETF, I suppose, as I say, in relative terms, looking at $27 million roughly from market cap there. Very, very, very small dividend yield of 0.45%. So today, ESGI, we saw a fall of 1.89%, which equates to 46 cents. On not a bad volume, I suppose, for this ETF because it is quite small. 2,700 shares traded. Untangle my tongue. Okay, guys, let's get deep on the top 5 ETFs for dollar rises today. So HBV, IVV, IJH, IHOO, and QHAL. So for those who have forgotten IHBV, which I think I've done a spotlight on previously, I'm losing track of which ones I've done spotlights on now. I've done that many. That's the Ishares S&P 500 AUD hedge, so hedged to the Australian dollar, represented by the index, composed of the largest cap US equities, so S&P 500 stocks, as it says on the tin. You're looking at a market cap of 166 million or thereabouts. Dividend yield not too bad for an international company. You're looking at about 2.8% for your dividend. So IHBV was up today $3.32, which equates to 0.92%. Reasonable volume of 1,500 shares traded. Okay, let's cast our eyes over the top 5 ETFs for dollar falls. Today in the number 1 position here, we are looking at the ETPMPM, IHVV, ILB, IRJ, and ETPMPT in the 5th position. We saw ETPMPM quickly. That is the ETF Securities Physical Precious Metals basket. and that one is backed up by physical metals allocated and held in the HSBC Bank in the United States. I'm assuming that's in New York. That one has a market cap of roughly $7.8 million, been quite popular in the last few weeks due to the trade fracas between the United States and China. We saw a fall in the share price of $1.56, which equates to 0.89%. Volume very, very low, nothing really to see here, 47 shares traded. Top 5 ETFs by number of trades. We're looking at here VAS, VHY, STW, IOZ, and VGS. VAS, that is the Vanguard Australia Shares Index ETF, and that one tracks the S&P ASX 300. Quite a healthy market cap here. We're looking at $3.5 billion market cap. So, you know, that one tells you there's quite a good liquidity there. We are... well, it's a dividend yield of about 4.45%. So, you know, if you're looking for something with a bit of a dividend yield, that's a play to look at. Morningstar give this one a bronze, which if you think about in a star rating system, that's 3 out of 5 stars. We saw today 1,000 trades, which is quite a lot of trades. When you look at the averages of the next 4, they're also sitting around the 300, 350 mark. VS quite popular today. That's the first time I can really remember that many trades going through. So today there's definitely people looking to dive into the Australian market. Definitely the top section of the market anyway. So we saw a rise of 31 cents or 0.38% for VAS. You know, VHY, which is the Vanguard high yield dividend ETF, also saw quite a lot of trades as well, and it's a good one if you guys are looking for good dividend yields. Top 5 ETF for value. I'm expecting to see quite a few of the names we've seen on the last page. So STW, IOZ, NDQ, VAS, and fuel. It's an interesting one. We can see fuel there. STW is the State Street Spider S&P ASX 200 fund. That one's designed to provide low portfolio turnover, accurate index tracking, and that all should add up to low costs for the investor. That one's one of the bigger ETFs on the Australian market, market cap of roughly $3.7 billion. You get a nice dividend out of that one, 4.36%. Morningstar give that one a bronze rating, so same as VAS effectively. As we mentioned, the Morningstar bronze rating is effectively a 3 out of 5 stars. Today, out of favour, STW was out of favour a bit. We saw a drop in the share price of 55 cents, which equates to 0.9%. Pretty healthy volume, 682,400 shares traded. Top 5 ETFs for value. We are looking at STW, VAS, IOZ, NDQ, and VAP. So as we mentioned before, the trades for the State Street Spider S&P ASX 200 fund ETF all on the downside because of the 55 cents loss in the share price, but overall value of those shares traded was $41.1 million, which is quite healthy. I suppose, yeah, people were looking to get out of that one, maybe cycling money quite possibly into VAS, which is tracks a broader market index. As we mentioned before, it tracks the ASX 300 index. Okay guys, let's take a deep dive into the spotlight now. So our spotlight for today is QHAL, which is the VanEck Vectors MSCI World ex-Australia Quality Hedged ETF. So what are the investment objectives? QHAL gives investors exposure to a diversified portfolio of quality international companies from developed markets, obviously excluding Australia, if I can say Australia properly, with returns hedged to the Australian dollar. QHAL aims to provide investment returns before fees and costs, blah, 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 that tracks the performance of the index. So why on earth do we want to even think about this one? Seeks to provide or identify quality stocks by screening based on the MSCI quality score. So you've got three criteria for that go into your quality score. High return on equity, which is what we always should be looking for. Over 15% is what you should be looking for. Stable annual earnings growth, so you want companies that have been growing for a long period of time. That gives you a bit more of assurance that they'll be growing into the future. And also low financial leverage, so you don't want companies that just got a lot of debt. Anything over 15% debt you should be worried about. This ETF gives you potential for greater diversification while seeking to reduce volatility in the international portfolio. Based on the MSCI index, and that's a leader in quality indexing. So, if you've got an index or an ETF, I should say, that uses that index, it's not a bad starting point. Okie dokie, net asset value, we were looking at 26.35, so there's a bit of a spread here, and closed out today above that at 26.48. Market cap of $10.1 million. Management costs, which we'll have a look at later, 0.43%, a little on the higher side. You get a yearly dividend payment of in July. The dividend yield's roughly 1.5%. That's my feeling. I look at the numbers, so don't quote me on that, but that's pretty close to it. So QHAL is a hedged strategic beta ETF, delivering a portfolio of global equities with quality attributes that perform with merit. So they're looking for quality, as we sort of went over in the previous slide. Quality companies with quality, that I suppose classified as quality, have defensive characteristics and tend to outperform during market downturns and periods of volatility. As a measure of sturdiness of the underlying stocks, it's reflected in their price, so that the price of those stocks tends to hold up under pressure. So QHAL has a management fee of 0.43%, which I mentioned before. Probably a little expensive, I suppose, when you compare to the other funds. Although, it does employ a strict stock selection criteria, and, probably can be justified because of that fact. Not just a blind index, I suppose you could look at it that way. So pretty much this ETF has been listed for less than 12 months. But, when you look at the performance of the unhedged version, which is QHAL, that's been running for 5 or 6 years, and it's performed quite well. So, has a low cost strategy, and should be able to deliver good returns for the long term. As always, we should be having a look at some other alternatives. So QLTY is one to have a look at. So that's a beta shares fund, and also have a look at ZYUS. So let's have a quick look at some pictures here. So top 10 holdings, gives you a good spread. A lot of the same names, but it's not as focused on the US, but obviously when you look at the top 5 or 6 or 7 stocks, that's all US focused. Probably your first non-US stock is Nestle, down there at number 9. As I said, it's only been running less than a year, so it sort of started at the end of March this year. So your hypothetical return on your $10,000 investment, you're just above. So you're above. What are you? A bit above 10,500. It's not too bad. So you're up a few percent, but it definitely is a heavily US focused ETF. But I suppose when you look at all these companies, they're definitely all international and diversified companies. Overall, I think it's something worth looking at, but is it something that fits in your portfolio? That's something you'll have to make your own mind up. It's definitely worth a closer look. Possibly not something I would bother with, but it's definitely worth research to get a better understanding of what's actually out in the market. G'day Valueholics. So just a quick reminder, the principal purpose of this post is to provide factual information and not provide financial product advice. Additionally, the information provided is not intended to provide any recommendation or opinion about any financial product. So what I'm saying is here, I don't understand your financial situation, and if you are unsure about your own personal finances, listen along to my videos a bit more, but it's always up to you guys, and if you need additional help, you should seek advice from a financial advisor. I'm not a financial advisor. This is just what I do in my spare time. I research, I look at these things and try to educate myself so I can make these decisions for myself effectively. So if you're not that confident yet, you definitely make sure you need to get some additional advice from a licensed financial provider. Thanks for hanging around to the end of the video, Valueholics. So my mission is to give you guys the tools, knowledge and confidence to go out there and take control of your own finances. I want to crack your financial sky. I think we can do that together. So we want to educate you guys, build your confidence, and most of all, just want to have a bit of fun, because these things can actually be fun. So learning about your finances can be quite rewarding. I actually quite enjoy what I do. It's a pleasure to bring it to you. So if you've got some spare second, give us a thumbs up or subscribe even, because that'd be fantastic to help me out with the YouTube algorithm. Pretty much primarily, even if you don't do that, I just want to make sure I'm giving you guys some value. So have a great day, guys. Invest on.